So this video will just discuss some of the reasons why the Australian dollar has depreciated in recent years and why it appreciated up until 2012. So just a bit of a recap for some of the things that can cause the dollar to go up and down. Demand for the dollar is when things like there's high growth overseas, when we have high commodity prices because we're getting more money coming in, or if we've got high interest rates, or we've got an economy that's encouraging direct and portfolio investment. So there's a lot of investment coming from overseas that can increase demand. Supply goes up when there's more importing, or when there's more debits because there's more profits or dividends or rent flowing overseas. Or if we have low interest rates, because Australians will then be encouraged by the investment options and therefore the return that they will get overseas, and therefore will be investing their money in overseas markets. Or Australians selling off Australian shares and investing abroad can happen as well. It can also happen when other countries lose faith in our markets. So if people wanted to get their shares out of BHP or Woolworths or Qantas or any big Australian companies, that would also cause supply of the Australian dollar. In terms of why the Australian dollar appreciated up until 2012, these are some of the reasons that our dollar was quite high in 2012. That includes things like inflation being quite low. So when inflation's low, there's more demand for our exports and less importing. A lot of people think of high inflation meaning a higher dollar, but they're very, very different. High inflation will generally lead to a lower dollar because we'll export less and import more. There was a lot of foreign investment because it was a safe option to put money in Australian banks. So a lot of people overseas were putting their money in Australian banks. Our interest rates were often much higher than other countries. So people were getting a better return, or foreign investors were getting a better return investing in Australian deposits rather than putting their money in other countries. There was strong growth amongst our trading partners, so we were exporting a lot, and that led to strong demand for our commodities, and more importantly, really high commodity prices. So the value of our exports was really high because we were selling our exports for a really high price. There was also low confidence in US markets, and therefore people didn't want to invest in the US, so our dollar was going up relative to theirs. In terms of why the Australian dollar has depreciated since 2012, interest rates have started to fall. So when interest rates are quite low at the moment, the cash rate's at 1.5%. That is historically low and is leading to people taking their money out of Australian banks and putting them overseas. There is weak growth amongst our trading partners, so China's not growing as fast, and that's leading to lower commodity prices. Even though our volume of exports is still quite high, we're not getting the same ridiculously high prices for our exports, so the overall amount of currency that's being exchanged is a lot less. And that's what we're talking about here, less demand and lower prices for our commodities. And the US market has picked up a little bit, and therefore their dollar's gone up relative to ours as well. But the main reasons the dollar has depreciated over the last couple of years is the low interest rate setting and the reduced demand for our commodities. That's also led to shareholders taking their money out of Australian shareholdings because they don't want to they're making less profit as well. Next video, net